Hello friends, welcome back to another video. Today we are going to be talking about the best currency pairs to trade if you are a beginner trading Forex, whether you are 1 day in, 1 week in, 1 month in, whatever you're in. I think that it's important to talk about the proper markets to consider when trading as a beginner and honestly just trading in general. You want to find the best markets that are suitable to yourself. What you'll know or what you'll notice over time about various markets is that different markets have different behavior. Gold trades differently than the stock market, trades differently than the Australian dollar, trades differently than the US dollar. Each one of these markets is like, think of it as like one big family. There's lots of different characters and personalities within the family. You might have sort of the more crazy, unpredictable uncle, or you might have, your aunt or whatever, right? Each one of them has their own personality. And it's going to be important as a new trader and just as any trader to pick markets that are suitable to the strategies that you are trading. That's going to be the first point that I have for you before you choose a market to trade. You really do need to make sure that you have a proper trading plan and trading strategy built for success before you go jumping into various markets and just putting your hard-earned money on the line. With that said, once you have your trading plan, assuming that you're sort of you've done some back testing, you've spent some time, it will become more clear to you over time which markets are more suitable to you through back testing and things like that. But today I'm going to give you my picks or markets that I think are the best or better places for newer traders to explore potential trading opportunities and strategies. So with that said, the first thing I want to show you guys is this. I mentioned some markets earlier. I talked about things like gold. There's also, the U.S. stock market. For example, US 30 is an index that a lot of traders like to trade on Forex brokers. So you have things like gold, US 30. You have things like oil. You have things like GBP, JPY. And there's something that is a similar trait in all of these different markets. And the main thing is all of these have high volatility. Okay, cool. So high volatility is a common trait in all of these markets. Why does that matter? Well, a lot of new traders, they gravitate to these sort of markets. They all want to trade gold and US 30 and oil because they sound cool. They're exciting markets to trade. But I will say, I think that this is a very, very dangerous path for new traders because high volatility, what this means is that if you're trading with high volatility, you can make a lot of money in a short period of time trading US 30 and gold. And that's what attracts new traders. The scary part though, and the part that honestly is where people lose all their money, is that with that high volatility, you can very quickly drain a small trading account and lose a lot of money trading these sort of things. They're great when they're going your direction. They're very awful when they're going against you. So I am actually going to say that as a new trader, I would say it's completely better to avoid these high volatility markets until you know what you're doing, until you feel a little bit more confident in trading execution and how your broker works and MT4. And once you sort of feel more comfortable across the board, I would stay away from these things personally, just because high volatility is really, really bad. Because what happens is with new traders, they often make mistakes. It's very normal for anybody who's getting into this stuff to make mistakes. You might accidentally over leverage, or you might accidentally take too many trades or overtrade or get frustrated and make mistakes. And you don't want to be making those mistakes on something highly volatile like US 30. You'll blow accounts and you'll lose a lot of money very, very quickly. So we don't want to be doing that. Instead, in my opinion, I think that it is better to stick to some of the lower volatility markets. And so let me list off some of those for you. Some of the markets that I think are a little bit more suitable and a little bit more forgiving for new traders, assuming you don't over leverage and do stupid things, which, by the way, you can lose a bunch of money on any market. But I think that these ones are a little bit more suitable towards beginners. Things like Euro USD, things like USD CHF, things like AUD USD, and why did I put USN? That makes no sense. There we go, USD. And then maybe one more to consider would be things like AUD CHF. Okay, so a couple things about these markets. These markets are inherently lower volatility, okay? And the reason that that matters is because when you have lower volatility, that means that they move less. They don't move so aggressively and so monstrously every time there is some drop of news in the markets. And the reason that that matters is because when you have less volatility, newer traders, when they do make those mistakes that they so naturally will make, they're not going to get wiped out by a gold move that they didn't see coming and they had no idea, why it's happening and they took a too big position, right? We don't want new traders to get caught up in really big problems. So it's probably best, in my view, to stick to the lower volatility markets. Now, there's also some other advantages to things like Euro USD and USD CHF specifically. These two are very liquid. Okay. And what I mean by liquid, if you're not familiar with what I mean, this concept is basically because these two markets are so heavily traded. These are, the euro and the dollar are two major currencies, right? They're like some of the two biggest, or I think they are the two biggest, right? So you've got the two biggest currencies trading back and forth. So there's a ton of trading volume. And with that high amounts of trading volume, what that means is that you get low spreads on your broker. When you enter a trade, for example, if you are to, let's say that you're looking at a chart and you want to buy the Euro USD. So we're looking at EU, looking at Euro USD, and we decide we want to buy this market. Whenever you enter into a position, if you were to buy this market, your broker is going to give it to you slightly higher than where you wanted to buy. That is the spread. So the broker basically says, okay, you want to buy EU? We will sell it to you right here. And they'll take that little spread and make their money. That's how the broker makes money. Now, these spreads, so that distance can be bigger or it can be smaller depending on the market that you're trading, the volatility in the market at the time, the liquidity in the market at the time, how many orders are going through, etc. And the time of day has a big deal on that as well. But generally speaking, if we're trading something like Euro USD, it has a high amount of liquidity, meaning that the spreads are very low. And so you'll pay very little to your broker compared to other markets out there. So these are things to all consider. So by that standard, you're going to be getting into this market much easier, much quicker, with less spread being paid. So that can be a huge advantage just to sticking to things like Euro USD, pound dollar is another very liquid market. And then you have dollar yen. Those three are going to be probably your most liquid markets to trade. And that can just be a slight, not advantage, but less of a disadvantage to some of the newer traders. So you get these markets that are a little bit lower volatility. They move less. They can be more forgiving. That's another thing here. More forgiving because again, if you're trading, Euro USD and you take a buy trade and then the market goes against you, it might be 30 pips in the span of, 5 hours. Whereas if you're trading something like GBP JPY, let's assume that this was GJ, in that same period of time, you might get 120 pips. Which can be very dangerous if you're newer to trading and you put on a size and then bam, you're down 120 pips on quite a high lot size. That's dangerous, right? So for the newer traders out there, I'm a fan of sticking to these highly liquid markets that are a little bit lower volatility, things like Euro USD, USD CHF, AUD USD, Aussie Swiss, and go get your feet wet with these things. Use a demo account. Don't go put your hard-earned money on the line until you feel comfortable, but try out these concepts on these markets. It may be a little bit less exciting, maybe a little bit less, hype and glory like trading gold and stuff like that. But if it keeps you sort of more relaxed and more down to earth and things are a little bit more calm, that can actually be a huge advantage, especially in this trading game where psychology and getting frustrated and dealing with the mistakes that you're going to make inevitably as a trader, especially a new trader, is probably an advantage in itself. So I would say these are my market picks for currency pairs that I think are a little bit more suitable for newer traders to explore with their demo accounts and to try things out on. With that said, guys, whatever your strategy is, I highly encourage you to do your back testing, do your work on it. If you don't have a strategy, if you don't have any sort of resource like that, there's a couple things that I would highly encourage you to do. Number one, subscribe to the channel down below. Follow for more free trading content. You don't have to go spend a bunch of money on a course, but if you watch my videos, I'm sure that you will get plenty of value out of it. Also, in the description, there's a whole bunch of free stuff for you that we offer. We have an email list where you can follow along with some of the trade ideas that we're sending out each week. You can join our Discord if you would like. You can use the tools on our website, read up on the articles that we're putting out, all sorts of stuff completely for free down below in the description. So check it out. Yeah, it's all down there for you. And like I said, make sure to subscribe to the channel as well. With that said, guys, thank you very much for watching, and we will see you back in the next video.